Welcome back to this special chat with Dr. Rupee Reddy, former Reserve Bank of India governor, on the current challenges faced by central bankers all over the world. Well, Dr. Reddy, because if you remember, some time back, Joseph Stiglitz said that US would not have gone through the Lehman crisis if Dr. Reddy was the Fed chairman at that time. Dr. Reddy, thank you very much for your patience, sir. Let me broaden the discussion to the global situation now. There is a fight against inflation which has had to perhaps take a bit of a backseat because of the instability problems. And then separately, there are also geopolitical issues that have cropped up. What is your assessment of the global financial system? Do you think it still runs the risk of collapses, sudden collapses?
In fact, I think we are in a very difficult ground there, Lata. I'm not very well informed, as you know, more than a decade old. But sitting back, I have this serious discomfort because if you know in the history also, one global monetary system cannot be simply replaced peacefully, very difficult. Now China is threatened, and therefore this can be sort of maybe a part of a disruption. But my fear is USA could be replaced by India or China or whatever it is, if it had capacities. My submission is that the US dollar is so penetrated to all instruments, virtually it is equated to trade. It's not just a trade, it's equated to everything. Yes. Now my point is, again going back, safe assets. Where do you get the safe asset? Safe asset is gold. After the gold, what happened?
US dollar.
After the gold, what is the safe asset? US dollar. Now the problem is what happened in 2008. Please remember, when Korea got into trouble, they went to USA for dollar. Though there was an agreement with China. Yeah. So my point is China is long away from being recognized as a global currency. In spite of their SDR, just unbundle the numbers. You unbundle the number trade, investment, instruments. See, basically, let me ask you another question. Alata, would you like to go and settle down in China?
No, sir. No. I would much prefer India.
Let me ask you a question. Will you go and let's say China? Or will you go and write a contract, financial contract in China now? If you can't, there is not a global currency. So you must ask fundamental questions. So my fear is that there will be continuous struggle, uncertainties for USA because of enormous accumulated weaknesses. But it will only create more problems for the US, more problems for the world. And then I don't see any way in which US can be replaced immediately. I'm not saying some distance after 100 years, 200 years. I also heard about people saying, 100 years China can, maybe. 100 years is not a small time, very big time now.
So, even
definitely
India...
not in the next 100 years, I think.
I take your point, sir. It is too entrenched. Like the English language, the dollar as a currency is also deeply entrenched. But India is trying experiments of rupee trade with some countries. You think that's at least some kind of a relief when the dollar dominance becomes too much?
I think there are some lessons for ourselves and also for China in the recent years. So there may be some lessons, but they may not be relevant at this juncture. But my feeling is, first of all, we should assess how many banks have availed the facility given by the government. The government says, let's go and have to do it. We may be keen to do it, but how many are willing to do it? How many banks are operating? I think in these matters, you have to operate at two levels. One is at the principles and philosophical and historical level. The other is numbers. What's happening, under what circumstances. Are we giving too many concessions to the banks who are willing to do that? Why are we doing that? So I think it should be strategic. It should not be confined. Strategic value, operations, and the numbers. I think my own feeling is that it's not easy to jump in all these important matters that quickly. If we do, I'm very happy.
Dr. Reddy, let me come to the Indian situation. At this point in time, do you think we are, tackling the growth versus inflation dilemma properly? We have increased rates continuously. What's your sense? Do you think our growth will do well? Or, what are we getting right and what are we getting wrong?
I think in the short term, we seem to be getting many things right, Amma. In the short term, particularly because the rest of the world is in serious trouble. The rest of the world is such terrible trouble, such serious trouble. And definitely in the short term, in view of our own capacities built over the years of managing short-term troubles, I think we are doing pretty well in the short term. On the medium to long term, I would rather wait and see and reserve my judgment.
Okay, what would your worries be? Would your worries be that the economic growth cannot proceed at this pace? Would your worries be about inequality? What broadly are the worries in the medium term?
At my age, I cannot afford to worry about anything.
Okay. No, is it,
I cannot afford
is it
to worry about
inequality?
anything. I want to be peaceful and having my coffee and ice cream.
Okay. Is it inequality that worries
In
you?
that order.
Is it inequality that would worry you?
If you ask me, if you have to pick up one, just one, okay, if you have to pick up one, I'm slightly concerned, if not worried, about the interstate and state-central relations.
Okay.
States, the importance of states and the state governments, the functioning of the governments, so critical to the people at large. Perhaps that I'm a little worried where it will go, but I'm not sure. These are all very difficult things.
Okay.
But I leave it there. I can't afford to worry more than that.
Oh, okay. Fair enough, sir. For the Indian banking system itself, is there any word of advice to the Reserve Bank? Do you think they've done a good job in terms of regulation? We've not had the problems that others have had.
I'm quite happy with the cleaning up of the RBI bank sheet that Das and his company have done, Raghuram Rajan and Das, etc. I think I'm quite comfortable with the overall framework. But the point is, when the result comes, the writing of 90%, na?
Okay.
The fellow who is taking over is only taking 10%. Yes. So was there something wrong with the original valuation or something wrong with the new valuation? Okay. See, I don't think in other countries the bankruptcy process results in realization of 5% of the value. Na? I don't know the statistics, I've been out of touch. But if I were in the Reserve Bank, the first thing I will do is I'll collect information about the realization in all countries, or at least important countries, find out what is the realization and why. Are we below or are we above? That will give me a comfort in regard to the working of the legislation. Otherwise not. And how quickly we do that. How quickly and how much. I think that's the only thing. Since you asked me, without thinking, I think I spoke from my teeth. Just like that. Okay. So don't take me too seriously if the numbers don't jibe.
Okay. No, there is a worry that a large number of loans are getting written off, and the realizations from the IBC process also has not been very satisfactory. It was excellent initially when we could find buyers for large steel plants, but increasingly both in terms of time and time taken and in terms of the monies realized, there is a problem. Just a final question on the growth inflation balance. Any advice to the Reserve Bank or the Monetary Policy Committee? Do you think the stress that inflation should be brought down towards 4% is the right angle that the Reserve Bank should take?
See, I'm not fully aware of the whole picture, but recently I was seeing mails which are being exchanged between top economists in the country, in the government. There seems to be a feeling that the economies can grow basically by stimulating demand. But my fear is, I think we are neglecting the savings part. That's neglected because household savings are taken as a residual in some theory. Household savings are a residual. My submission is the character of household savings, don't underestimate its importance. First, magnitudinally, household savings, particularly household financial saving. If you don't have enough household financial saving, there is no financial to cover investment. Okay. And secondly, if you go on having negative interest rates for 10 years to stimulate demand, where is the money for investment? Okay. Today, because of the peculiar circumstances, you may have a moderate current account deficit. Current account deficit may be moderate today in extraordinary circumstances. Imagine a normal graph. In the normal graph, it's very difficult to sustain this type of deficits. So I would say, as the government of India and the state governments are emphasizing, attend to productivity, attend to quality of education, and also attend to household savings. That will finance enough investment. You see, just digitalization will not produce productivity. Digitalization will produce only if it is added to education, and it is also added to quality of productivity. Productivity, education, digitalization together, not one. Okay. So I think we are almost on a dangerous ground there. Sorry to say that.
Fair point, sir. But that's a very big one that you're giving us, that the system needs to concentrate on household financial savings per se. That's a big one, a big lesson coming from you, aside from the fact that you would worry that center-state relations are not in ship shape. Thank you very much, Dr. Reddy, for joining us and giving us your thoughts on a variety of issues. That's it on this edition of Indianomics. Thank you for watching.